Hello, welcome back to the final session of the FERMA Talks. We're live still in Brussels. I hope you had as interesting a lunch as we did here. Lots of networking going on as yesterday. So for our final session this afternoon, we're going to start with an interview with Fausto Parente, who's the Executive Director of the European Insurance Authority, EIOPA, who we referred to this morning in our roundtables. Fausto, in his role, presides over the day-to-day management of EIOPA. He was elected to the Board of Supervisors of EIOPA in 2016 and was reappointed for a second five-year term in 2020. He has a distinguished career in supervisory regulations and policies at both national and international level. I'm singing your praises, as you can see, Mr. Parente. And together we're going to explore the theme of risk to resilience from the insurance supervisor's perspective, as well as discussing possible ways forward. So Fausto, hello, buongiorno, thank you very much. Could we give Fausto a round of applause, because he's in his office. It's nice to know that here live in Brussels we can see you. Perhaps you could start, Fausto, by giving us a brief idea of what EIOPA has done in response to the pandemic in its capacity as the EU's insurance supervisor.
Yeah, sure. Thanks a lot, Alex. Thanks for the kind words to introduce my interview, let's say. The pandemic, what we did as a European Supervisory Authority. First of all, we had to look at the business continuity. We wanted to assure a business continuity, and we wanted the provider of insurance cover and pension to focus on the need of the customer, of their customer. So we try to alleviate a bit the so-called regulatory or supervisory burden, for example, in terms of postponing some deadline, postponing the reporting, so that they could have taken a complete focus on their customers. Then we also wanted to mitigate the impact on consumers directly. Also here, we asked the insurers and pension to look at to be flexible, to clarify the terms of the coverage in the contract, to allow, for example, late payment, something like this. And we may say that business continuity and impact on consumers were by and large managed. And of course, the third point was to ensure the stability of the sector, to ensure the solvency of the insurance, for example, the insurance undertaking. In this regard, we started from a good point, starting point. The Solvency II framework already allows some flexibility, already cover for possible losses to be absorbed. So despite the unprecedented crisis, the sector remained solvent, stable, and all in all, I can say that it worked well. Because the crisis was really unprecedented, we wanted also to spend some words of cautious and prudence. And you may remember that we asked specifically to suspend the payment of dividends for a while, because the impact of the crisis was not really possible to be measured reliably since the start, at least for a while. Those were the major, let's say, area of our intervention, and I must say that it worked. The sector remained stable. We could continue to apply the framework as it was designed, so no specific or special measure to be taken. So all in all, I must say that we were happy about the answer from the market on the crisis.
Now, we've seen a lot in the press, and we've also been discussing it during the FERMA talks about the lack of insurance coverage that was available, obviously, to businesses during the pandemic, and there being something of a protection gap. What is EIOPA's thinking on the issue going forward? How can we take this on?
Yeah, let me say that this was not a surprise for us. The pandemic was only one of the, let's say, is only one of the causes for big disruption. But the protection gap, we were working already on some protection gaps since a while. Mainly at the beginning, we were focusing on climate risk, on climate changes, environment. Then the pandemic came, and we saw that again the protection gap is quite huge in all the countries, and particularly our area of interest is the European market. You know that we have an idea basically, which is in our view that if we put in place a system of shared resilient solution based on the prevention and on the insurance role that can help preventative measure, this will help the society to be more resilient in the future. This is something that it requires a bit of big picture to be taken into account by public authority, private sector, but we issued some technical paper on this to call for political appetite, let's say, to develop such a system. The key element, again, is the prevention, because the insurer can play a role in preventing risk and mitigating risk, because they can integrate the...
We seem to have lost Fausto, who's been cut off in his prime. I'll try and talk a little bit to see if we can get back. I was keen to ask him questions. I'm sure you all are on sustainability issues, but the image doesn't seem to be very sustainable, unfortunately. And we have a great risk management when we do. Fausto, di ritorno.
Can you hear me? I don't know what happens.
We lost you about 20 seconds ago, just so if you can resume what you were saying.
Maybe I just wanted to stress, if I don't know where you lost me, but to stress the role that insurance can play in such a system. Preventative measure, coverages offered on the basis of prevention measure that can be taken by citizens. Then the insurance mechanism can play a role. Capital market can also play a role in let's say, diversifying the risk for beyond, let's say, the traditional sharing mechanism of risk, reinsurance, and so on. So this is something that we can put in place, in our view, if there is enough political demand and support for the future crisis, basically, because this is something that we know we cannot avoid that will come. We cannot, let's say, disregard the possibility that will come again another crisis.
Perfect. We got all the reply. Thank you very much. Another theme which has obviously been interesting us a lot and informed all our roundtables and our discussions here has been sustainability. Obviously, EIOPA has a key role to play in terms of sustainable finance. Can you tell us a little bit more about that?
Yeah, the sustainable finance, it's again in our agenda, I mentioned before, since a while already. We believe, again, that pension fund and insurance as part of the long-term investor of this of our society, as part of the risk coverage of our society, can play also in this regard an important role. And we have been working on this area first to, for example, to introduce a sustainability disclosure into the product offered, so that we can, let's say, follow the people, citizen, consumers' appetite to invest directly or indirectly in sustainable project. Then we have been working, we will continue to work on maybe some specific prudential treatment of asset associated with the environmental objective. This is something that we need to still finalize and further develop. And then from a macro perspective, we are also developing some methodology to include climate risk, environmental risk in general into our stress testing methodology, because we need to monitor from time to time the resilience of the sector as a whole towards this crisis. We follow a lot, of course, as you can imagine, the sustainability strategy from the Commission. We provide the support. Again, insurance and pension can play a big role in this respect.
Okay, another theme that we talked about specifically this morning was cyber. and focusing on digital. We know this is a hugely important topic. Can you talk us through what EIOPA is doing in this particular area of cyber?
Yeah, let me say first that the cyber market, cyber insurance market is important in our view for a sound development of our digital economy. We see that the market is growing. More and more providers, insurers are offering products to cover from cyber risk. It's growing, and there are further condition to allow further growth of this market, and these are the area on which we are working a bit, monitoring and foster to some risk management practices to take account of cyber risk, because the insurance undertaking should be able to monitor this risk. Collect information on cyber underwriting. We have been introducing some dedicated templates to collect more detailed information on this regard into the Solvency II package right now under discussion. We want to also investigate the so-called non-affirmative risk cyber exposure of the company, because sometimes we have discovered there is some sort of accumulation of risk that needs to be better detected and is not clearly managed because they are not explicitly covered. So this is an area of concern, because it's as I said, we need to monitor if this accumulation of risk can trigger some additional concern. Then we believe that stress testing is key to monitor the resilience of the market as a whole. So we are introducing cyber risk into our stress testing methodology. We also need to work together with the policyholder, together with the Association of Consumers and Industry, to clarify better the contractual definition, the condition, the terms, because we have seen in the recent experience that sometimes this is not crystal clear and creates a lack of confidence. And of course, let me also mention the regulation that is under negotiation in the Council and Parliament, the so-called DORA regulation, the Digital Operational Resilience Act, which will be an important step in our view to monitor the risk, to collect data on a harmonized basis on cyber incident. And with that, of course, we can enhance the possibility to risk management, to price the risk, and all in all, to cover the society against those risks. Data is key, and we need to have standardized data available for the insurance to play their role.
Right, we just have 2 minutes left, so just very briefly, if you would, Fausto, a few words about open insurance. We've been talking about that too.
Yeah, open insurance again is something that we want to develop. We issued a paper. We are still analyzing the information we collect, the input received. Basically, we want to facilitate innovation by also understanding to which extent the insurance value chain can make use of data sharing. The problem is also that we want to have this innovation to be in favor of the consumer. So we need to be sure that that the risk associated with such developments, namely data security, cyber risk, again, ethical use of data, are well managed by the undertakings. And this is where we need to strike the balance, and we are still working on it.
Okay, well, grazie a lei, grazie tante. Thank you very much indeed. You came across one little technical hitch, but we got absolutely everything you said. We can give him a round of applause because it's always nice to know that somebody's been listening to us. Thank you very much indeed, grazie a lei. And we move on now to our next round table. So here we are with the round table. Thank you very much for being with us. How can organizations build financial resilience to disruptions? That'll be the theme of our final round table this afternoon. In the context, obviously, of the pandemic that we've been talking about, many organizations learned that there's little or no coverage available for the interruptions to their businesses. So FERMA has actually proposed a framework which is based on four layers on shared resilience, from the corporate to the insurer to the national governments and ultimately to the EU. And that's what we're going to be discussing now. The panel will build upon the four layers and deal with the questions of how can organizations build financial resilience to disruptions, and how can we also mitigate the impact of systemic risks using risk management and insurance as a foundation. So I'll be asking and introducing the members of my panel actually here in Brussels in a few minutes, but first of all, we'd like to have, as an introduction to our theme today, a video from Stéphanie Yon-Courtin, who unfortunately can't join us, but she sent in a video. Stéphanie is a member of the European Parliament. She's from the Renew Group and the Vice President of the Committee on Economic and Monetary Affairs. She was Shadow Rapporteur for the 2020 report on building a capital markets union in the European Union, and is very closely involved in all the legislative discussions on consumer protection, insurance, and distribution of financial products within the EU. Here's what Stéphanie has to say as an introduction to our discussion.
Good afternoon to every attendant of the 2021 edition of the FERMA Talks. Many thanks to FERMA for their kind invitation to participate in today's discussions. Unfortunately, I'm not able to join you live, but I'm sure that the discussion will be lively. As a vice chair of the Econ Committee, I'm regularly dealing with highly technical issues. They can sometimes feel far from the concerns of European citizens, and I'm sure my colleague Alfred Sant will agree on this topic. However, as a European politician with strong local roots here in Normandy and representing all European citizens, my role is basically to ask the right questions and to provide the right answers on the ground. With the topic of financial resilience to disruptions, I think we have a great example of a topic that is both technical and with a direct impact on EU citizens. Some of you know the story already, but I'm gonna repeat it again because I think it's quite topical to this subject. Well, I became aware on this topic during a discussion with local entrepreneurs and restaurant owners in Normandy back in July 2020, which was the core of the crisis. All of them understood the necessity of stopping their activities temporarily to face the urgent sanitary situation. They were showing solidarity, as we all did during this crisis. However, they were very frustrated by the answers given by their insurers. They felt like the only answer they received was, well, I'm sorry, but we cannot help you because your contract does not cover pandemic risk and losses linked to lockdown, so bye. So I completely understand that insurers were not prepared for such an event of global scale. Nobody was. And I know that a lot of progress has been made since July last year. But this was a clear breach of trust, I think, between businesses as policyholders and the whole insurance ecosystem. And I think now our mission is to rebuild trust. And I am committed to use my platform as an MEP to do so with you all. I have participated in many discussions in France at EU level and at international level in the OECD on this topic of financial resilience. From these discussions, I have come to the conclusions that a solution should be built on three main pillars: transparency, accountability, and dialogue. Let's start with transparency. It is needed more than ever. We need more information on pandemic risks and related macroeconomic risk. This will help building new solutions to answer these challenges. Businesses also need clear information on what is covered and what is not covered, as well as all the costs of their contract in the long term. I think, in addition to that, accountability will be key because it's linked to transparency. I think businesses should be confident that insurers and risk managers will stick to their commitments on coverage and on cost. We should avoid changes in coverage and costs, change from year to year with limited prior notification, which will bring major uncertainty for businesses and any stakeholders. Businesses cannot be put against the wall with no recourse when changes happen. Thirdly, this is the silver bullet, dialogue. Regular discussions need to happen between businesses, insurers, and risk managers, also and above all in good times. Otherwise, the conversation only happens in bad times when businesses are in need, and this creates an unequal relation and frustration at the same time. With these three pillars in mind, I'm happy to let the other speakers go live to continue the discussion. I hope you have a nice debate. Have a nice day. See you soon.
Thank you very much indeed. Merci beaucoup, Stéphanie Yon-Courtin. I'd now like to introduce the live speakers here in Brussels. Delighted to have Amélie Beitbourg. You are the CEO of Lloyd's Europe and Regional Director of Lloyd's EMEA at Lloyd's. Oliver Wilde, you're the Group Chief Risk, Insurance and Internal Control Coordination Officer, Veolia, and President of AMRAE, the French Risk Management Association. And also we have Julian Enoisi, who's a bit British, but un poco italiano anche, Enoisi, Chief Executive Officer of Pool Reinsurance Company. And you also sit on the advisory board of the OECD International Network on the Management of Catastrophes. So we are delighted also to have live by Zoom with us Alfred Sant, who is a member of the European Parliament, the group of the Progressive Alliance of Socialists and Democrats. Alfred is a former Prime Minister of Malta and member of the Maltese Labour Party. Hello, nice to see you. Let's give him a round of applause because people are sitting there alone in their office. It's always nice to know that. Let's applause to welcome Alfred. There we are. Live studio and many more people watching you through the internet. Now, after that opening statement from Stephanie, each of our speakers is going to make their contributions in the ordering of the four layers of FERMA's shared resilience framework. Namely, we will begin with risk management, then we will turn to insurance, then to national government pool solution, and concluding with the supranational level, the view of a member of the European Parliament on the role of the EU. But I'm going to turn to you first of all, Oliver, because you're the representative of level number one, the first layer of FERMA's framework, the risk manager. AMRAE has recently released, I think, its annual state of the property and casualty markets report. What does it show?
Well, the trend is still the same since 2019, probably worse. So there was a brutal change in the market behaviour, which is knowledge to everyone these days. What we're finding is 90% of the respondents basically said that they had an increase in premium, which, you know, as part of the cycle is understandable, and there was a brutal rise in 2019 already. The continuing trend that's worrying is the reduced capacity that's offered by the market, or even certain carriers actually withdrawing completely from certain risks, which is proving to be very difficult for companies to find insurance. And the other aspect is the revision of all the wordings. So, and it's a consistent change across all insurance policies. So that's proving hard as well, because there's no distinction from organisation to organisation to actually tailor your insurance policies to your company's risk. So bringing it back to risk management, which is the fundamental really, that's where you should start with, which is identifying and understanding your risk and developing your resilience through your own measures, preventive measures and investments to protect your assets, your people, your investments. And then you would only go in and seek an insurance solution. So we're not insurance buyers, we're risk managers first, and then insurers part of the solution, obviously, because it's where the risk sharing occurs. And so what this year's study is showing is that there's, I suppose, more of a fracture between that risk sharing and we need to find new solutions.
What's it mean for insurance buyers going forward?
It means we have to find alternatives, because if the market's not offering the insurance product, I think companies have been investing in risk management for a number of years now. The COVID crisis has demonstrated the value of risk management and how effective that can be. And so therefore I think, and this is what I was saying in 2019 and 20, is we need to make sure that that dialogue exists between the insurance carriers and the risk managers, where we can actually explain how we manage our risk. And so we get differentiated if we've invested in risk management so that we can actually find a good sharing model there. I think there's a gap being created, and so therefore, self-insurance has always been part of that, the layering of risk management. And so you're seeing more and more companies either using more capacity of their captive or actually looking at creating a captive. So one of the recent studies or surveys that we did at AMRE as well showed that just in France alone, there were 50 projects underway for creating a captive. So it's a significant change.
You don't sound very French. Are you French?
Both.
Oh, you're both, right. Okay. Sound very British to me. Anyway, right. Let's go on to Amélie for our second layer, which is insurance. On this point, we've established this throughout the discussion so far. There's a growing recognition that the reinsurance sector cannot plug the financial gap alone. So there's still a strong push for the sector to contribute. What do you think could be the contribution of the insurance industry towards the thing that we're talking about is financial resilience?
Well, I think that insurance is really about sharing risk and mutualization. So this is where systemic risk is definitely the enemy. However, having said that, we still, I think, can operate with systemic risk, provided that we have the right framework. So Lloyd's published a paper looking at three different frameworks. So there's a so-called Restart, Recover, and Black Swan Re. And it's all about, indeed, making things better. So if we look at the insurance level, we can have simpler wording, and I think that was mentioned already. We can have clearer wording, simpler products. We can do also...
what do you mean by simple wording? It's the language itself too complicated?
Language
too bureaucratic,
itself.
or?
We need to make sure that then everyone is covered as well, so that we have this better coverage. It can be simpler product by just having some payouts. It's also about the simple rules of diversification, so geographical diversification. This is where the world shouldn't be just local, and if it's local, it needs to be reinsured. If there's an option to have more risk all over the planet, then that's better diversification, because things do not happen always at the same time. This is where the partnership with the local state can be better, because if you think about the local lockdowns, I mean, lockdowns in general, they could have been local instead of being everywhere. So that would also help, I think, on the diversification and mutualization. And then if you think about the other angle, so there's also mutualization over time. This is where we can create products where after a catastrophe such as COVID, then people have started to pay a premium and they can start to pay over time, let's say 10 or 15 years. And this is where the partnership with the government can help, because then you can have a guarantee from the state should those payments not occur. And then Blackstone Re would be more about a reinsurance scheme, so probably when my colleague will explain, which are already out there where the government can play a role in excess.
How do you think that the governments and the insurance industry can better collaborate towards resilience?
Well, I think it's around that kind of framework that I've just been through. I mean, you are talking about indeed less capacity on the market, but this is where, if there was this clarity around this partnership with the government around the type of frameworks I've just been through, I think that indeed insurers would be bolder and would propose those types of products.
Okay, thank you very much. Come back to you later, but let's go on to an example of the third layer, which we're going to do with you, Julian. Paul Ray, I think that's how you pronounce it, is the UK Terrorism Insurance Public-Private Partnership, of which you are chief executive, as an example of the third layer of the resilience framework from FERMA. Can you tell us why the scheme was set up, how it's changed over time, and how you think it might change in the future?
Sure. So I think what you saw in 1993, which is when the scheme was set up, was market failure. In other words, there was no longer cover available for the risk that was perceived at the time, which in the United Kingdom was the IRA threat, the Irish Republican threat of terrorism. You saw that same market failure after 9/11, and that's when many other pools around the world were set up. And you're seeing market failure effectively happening again, as you've heard all morning about, constraint in supply of product, in supply of capacity, and therefore what is the solution to that? And solutions come in many shapes and sizes. You can have socialization of risk, which is where there is no private market capacity and the government effectively takes that risk off of the citizens' hands. Or you can have mutualization of risk, which I think is what Amelie was talking about. And certainly, if you are a free marketeer, as am I, you are far more in the realms of mutualization of risk. The problem for mutualization of risk, if you're not going to simply tax people, is that you have to persuade people to buy the product. And I think that's one of the challenges that we're faced with today, because, of course, if you've just seen the government in the UK alone bail you out for £400 billion, what is your incentive to buy catastrophe insurance? So there's one challenge. The second challenge is the product going to respond when you have the loss? So if you think 28 years ago, it was really an analog terrorism threat. 28 years later, you have a terrorism threat from cyber to drones. You're seeing CBRN, chemical, biological, radiological, and nuclear, and cyber terrorism, of course. So you've got a huge change in the terrorism threat, and the evolution in the product needs to keep pace with that. Otherwise, you're selling them a terrorism product that isn't going to respond to a particular type of terrorism.
What about in 28 years' time? And is terrorism really a term which has any sense anymore? Because are we talking about cybercrime as being terrorism? And because, as you said, we're nearly the same generation. When we were watching television 28 years ago, it was bombs. Now it's cyber attack. What's it going to be in 28 years' time?
Well, I think that goes to Amelie's point about wordings and definitions, because if your definition of war is 100 years old and the last time war was declared was 1939, then what is the point of your definition of war? If cyber terrorism is actually state-sponsored, then is that war? Is that a hostile act of a nation state, or is it an act of terrorism? So just in that microcosmic role of terrorism, you have huge issues. So before you even start getting on to pandemic, and whether that is human communicable disease, whether the lockdown by the government negates the fact that a business chooses to mitigate its own risk by shutting its doors, where do all those things fit in? So you can't just create something and then leave it static. It has to evolve.
Okay, well, let's go on to our final level, the fourth level, the supranational level. Dr. Sant, you've been listening, we see, very intently to what people have been saying. Can you tell us what role the EU could play on the fourth level?
Well, yeah, major gaps in terms of protection and insurance have been uncovered by the COVID pandemic, that's obvious. But there has been almost total unpreparedness at both national and EU levels in the face of business interruption as the pandemic took hold. Now, in most cases, I would favor a bottom-up approach to resolving problems in line with the European principle of subsidiarity. However, there are cases, this is one, where remedial strategies must be continental in scope if they are to be effective. Along with climate change, the COVID-19 pandemic has been one such case. And so it will be for future pandemics and other crisis situations, like cyber contamination and collapse. The threats they unleash do not stop at borders, do not discriminate between countries and regions in their reach, and cannot be tackled separately and individually, let it be by companies, industrial sectors, or member states alone. For this, European solutions to ensure recovery and resilience are and will be paramount. That such solutions should include a Europe-wide insurance backstop makes sense. So in this area, there is a need to identify what can best be done at EU level, like improving access to EU-wide data to ensure proper modeling of non-damage business interruption risks, EU-wide insurance risk transfer mechanisms at private, public, national, and EU levels, instead of largely inadequate traditional mechanisms, and then partnership between public and private sector incentivized by the EU pooling of resources. Shared resilience solutions are needed at EU level, not only because it is in everyone's interest to have a resilient society, but also because pooling of resources at EU level is quite clearly the only way measures undertaken can be effective, as is demonstrated by the experiences of the vaccine rollout in Europe and the European Recovery Plan. How to design pooled insurance and reinsurance structures is a vital issue. Different potential roles could be foreseen within the European Union for all interested parties. EIOPA has suggested an EU-wide expert group for data sharing and risk modeling to consider whether cover should be mandatory and payout should be based on a pre-agreed parameter or index. An issue paper from EIOPA from summer 2020 sets the framework quite well, in fact. However, one is left, unfortunately, with the impression that the European Commission remains cool to such ideas. Either it believes it already has too much on its plate, or it prefers to focus on what it set out initially, before the pandemic started, as its work program. There are also other key obstacles to the further elaboration of an EU position. Not all member states have reinsurance or insurance pooling arrangements in place to cover catastrophic risks, and anyway, existing pooling arrangements do not cover pandemic risk. This makes it difficult to build an EU structure if no pre-existing model is available at national level. Another issue could be related to national and EU funding that will need to be mobilized to lever the build-up of national public and private capabilities. Is there enough political will to direct funding towards this objective? Public funding. Frankly, as of now, I doubt it. All things considered, an EU role and intervention in this area could be of help to definitely provide a framework and to incentivize insurers and national governments to consolidate risk prevention and risk-sharing measures into a Europe-wide policy. But again, as of now, I do not sense there is much appetite for such an approach. I hope I'm wrong. Meanwhile, the European Parliament could serve as a trampoline to give more salience to the issue, which obviously is overshadowed by other apparently more urgent matters. Raising a consciousness among MEPs about what needs to be done would then be a first step towards changing the order of priorities. If that were to happen, under the pressure they could exert, the European Commission could come round then to the idea of working on an initiative in this area ASAP. Thanks.
Thank you very much indeed, Alfred Sant, coming live. I hope you'll stay with us. It's always a bit difficult to come in, but if you want to, raise your hand, and I can see you in front of me. So if you want to say anything, raise your hand, and I will absolutely take your contribution. I'd like to ask, that was the 4 layers. I think you've all represented one of the layers. I think we've understood what the FERMA Shared Resilience Framework consists of. I'd like to ask you, what lessons do you think can be learned from the market's response to COVID, particularly around business interruption claims, because that's what we've all been hearing about. We've been hearing about businesses which haven't been able to cope. So what do you think are the lessons that have been learned? Ladies first, Amélie.
Well, I'll say again that that wording is really key, because this is where there was unclarity. So I'll put again the emphasis on this. So insurance contracts are not clear. And also I think this thing about underinsurance, we can see that not everyone had a cover. And this is where, to help us insurers provide capacity, then we need to have a very broad base. And I think that's to your point, because at some point either is as an insured or as a taxpayer. And then I think that the best would be that this mutualization would be provided as an insured, at the insured level, rather than at the taxpayer, because then it's non-political and it's just mathematical.
Non-political and mathematical. Oliver?
I will come back to the basics of risk management. So I think one of the key lessons from this crisis, which we're still going through, is if you had good risk management practices in place and identified your risks, not only for pandemic, I mean, a lot of companies didn't have the pandemic on their risk map. However, they had all the other risks, supply chain and so on, and they had preventive measures.
Can I ask a very naive question?
Yeah.
Well, how is that possible? It seems that a pandemic is something that could happen. How is that they didn't see that coming?
I suppose you would have probably something like an epidemic, but probably not to the scale that we had. I think when it started, even governments were thinking that it would be contained quite rapidly and that it probably wouldn't cross borders or become a worldwide issue. And I think that's probably what's very scary with cyber, is that it's common terminology, it's a virus, it can spread very fast and probably a lot faster than COVID-19, to be honest. But if you've identified your risks appropriately, and put in place mitigation measures, you'll actually cope with stresses better and shocks to a certain extent. So you'll be able to absorb some of the large impacts and continue your activity. Whereas if you don't have good risk management practices in place or haven't thought about risk, then you're dependent on whatever system's in place, which is insurance. And if you don't have the right coverage, then it's not going to happen, and then you'll rely on the government, which will end up being the taxpayer, and you've got an economic consequence to all of this.
Julian, what do you think we can learn from the way the market responded to COVID?
Well, I think there are probably lots of lessons, but I think the principal one for me is that what we're now seeing is an insurance market that has spent 350 years looking backwards at the past in order to predict the future. And actually the risks that are being faced by the customer now are, as you heard this morning, are completely different. It's not physical assets anymore. It's, I think one of the examples given this morning was reputation. Mm-hmm. It's supply chain. It's cyber. And the insurance industry has to react and respond quickly. Otherwise, it's going to quickly become irrelevant as they look for different solutions outside of the insurance solution. You already said insurance. Oliver already said that insurance is only one part of the solution. Well, if they figured out all the rest of it, it's not long before they figure out the financing either. So we have to, I think, look for different structures. You mentioned Black Swan Re, that's one example, one idea, of how we can start to use predictive analysis to look at those risks and what they're going to manifest in the future. Maybe not look at them as separate risks like pandemic or cyber, and actually look at the effect of those, which is really non-damage business interruption, is business interruption on a massive scale. And how do you create a solution, design a solution perhaps? I encourage you, I applaud you for putting all this together and getting somebody from the European Parliament. And I thought it was fascinating listening to what Dr. Sant said, because I think the issue facing governments right now is they don't know how to deal with this. They can't deal with it on their own, and neither can we as insurers. So somehow we have to collaborate to design an economic structure that can create resilience for the future.
Do you want to come in on that, Alfred Sant? The unpredictability of the risks that we face in the modern world and the way that governments and insurers are going to have to work together on things they can't really foresee.
Yeah, the problem really is how to ensure resilience, because resilience to ordinary problems and crises is one thing, but resilience to something that's completely unpredictable and could be large scale and massive is something else. And this tends to sort of be placed on the back burner, if you like. But when it happens then and it strikes you hard, it strikes you really hard. And it could happen, as we see in the sanitary situation, but also in the cyber situation. And there, I guess, what one has to do is to build the structures that at least will be able to tackle what can be foreseen. Because then what is not foreseen can at least be, counted back on what has been built already, like in the resilience of cyber systems. But beyond that, I think there also has to be a realization that it can't be a national solution, I'm afraid. It has to be a continental solution, and eventually, especially in the cyber area, but also in the sanitary area, a global solution, and for which there has to be also the backstops that are global or continental in scope of the insurance scene as well.
I see that Julian was nodding to what you were saying, even though the word backstop is probably not one that people want to hear much about it anymore in another context. But anyway, can we talk about in terms of underinsurance in Europe? I think it would be quite interesting if we discuss whether that's limited to specific business lines. Amélie.
So no, I think it's across the piece. Of course, there's cyber and climate change, and I think we've discussed that. Climate change we could see in this very region here, in Belgium, the Netherlands, Germany this summer. So underinsurance is everywhere. Just comparing Europe with the US, there's 1 percentage point of what we call insurance penetration difference. And if you think about the fact that it's applied to GDP and GDP, so in the US or Europe, it's around 15 to 20 trillions. So 1 percentage difference is very big. So it means that indeed in Europe, there is this underinsurance. And as I was saying, across the piece, so I think there needs to be facilitation around that. So we've mentioned the partnerships between private-public partnerships, but it's also about regulation. And I think one thing that we've mentioned is that it couldn't be local. Even a continent is probably too small when you think about insurance. It's probably the overall planet. And as an international insurance platform at Lloyd's, we are really looking at the planet. And I would even say, if you think about interstellar travel, then it may be across the galaxy soon. So
you're going up with, what's he called, the guy who's 90 today? William Shatner, going up into the, looking for insurance and resilient solutions in the cosmos. Do you agree with this, Oliver? It's galactic already?
Galactic? Well, maybe not yet, but probably soon. No, I think we've got a critical issue, which is the lack of awareness. Although cyber has been on the radar for a while, climate change is definitely not something new. So you've probably got less and less skeptics. And so the awareness factor means that it's hard to create a market as well. So if you don't have sufficient volume of people wanting an insurance solution, or even understanding their risk and knowing that they're exposed to these risks, then it's actually quite hard to develop a market. And if you look at cyber insurance, has been a while for quite a few years now, but it's still very immature. Not only because of the lack of awareness, or if you're a smaller business, you've probably not analysed your risk to that extent. And then there's a lack of understanding of what the risk is.
Why haven't they? I mean, I'm from outside. I found that quite alarming. I'm very aware of cyber crime and so forth. Why are these companies not aware of this?
Sure, but you've probably got some smaller companies that haven't invested or don't have the resources to analyse their risk in detail and know what it actually means. And know what the alternatives are. I mean, a larger company, if you're on essential services, you know that you can go to a manual mode and protect your assets. if you were faced with a cyber attack, and that's the sort of things that you have to look at. Whether you get a shutdown due to a pandemic or because you got riots like we had in France for for more than 12 months, you probably hadn't anticipated the fact that you could probably do takeaway, but when you have to close because there's a riot risk outside, it is a bit different as well. So I think there's the need to do more scenario modeling and understanding what your risks are and your exposure is. And then also, once you've put the mitigation in place and you've got your alternatives, is that needs to be acknowledged and understood by the insurance market as well, saying, do you agree that this is the right thing to do? And there needs to be that dialogue, recognition of the investment that I'm making to protect my asset. And the better I protect myself against stresses and shocks, I'm actually protecting the insurer's portfolio as well, because I'm not going to be making any claims. So if we don't find a meeting point, then we'll be seeking alternatives and different ways to finance it. And once you get a taste of that, I'm not sure whether you actually come back to an insurance solution.
Julian, what do you think of this? Are you one of these galactic people? Or because I find it difficult, having listened to these 2 days of talks, to believe that it's going to be easy to get a planetary consensus on insurance issues, but why not?
Well, they talked about the awareness gap, the protection gap. There's also a trust gap. And the trust gap is basically the customer's trust that when the time comes for his product to pay out, that it actually pays out. And that, I think, is a huge problem for us as an industry. It goes along with the amount that we actually spend on running our businesses as opposed to paying claims. But that's a whole other issue. The issue then comes down to if you look at global GDP growth since 2008, that has far outstripped insurance growth. That means that there is automatically a growing gap in terms of the amount of cover that is being bought. So you've got a supply problem and you've got a demand problem. And the supply problem is exacerbated by the fact that we're not designing products that meet the needs of the customers. So the protection gap is growing all the time. It's well documented. Insurance penetration in terrorism is less than 10%. And that leads down to the question of, do you mandate cover or is it voluntary? So these are all interconnected issues that are extremely complex, but ultimately need to be the subject of a debate between industry, customer, and government.
A question I'd like to ask you is, what role do you see alternative risk transfer having here?
Well, definitely that's one of the options. First, in terms of capital, because then you can have capital from even a wider origin, because as I was saying, as you need to have diversification, then you need to have capital from everywhere. So that's definitely an option. There's also the types of products. So parametrics is also very helpful because it's a simple product. Instead of having two occurrences, whether the event happens and whether you have a damage, then it's only whether the event happens, and therefore the claims payments are very quick. So all of this, and that's innovation, I think it is great. Then we need probably some regulation as well, as I was saying, because it's around cross-border, not only insurance, but capital as well. So that's a very important point.
On alternative risk transfer, would you like to add something?
I think, we've already said that government can't solve the problem on its own. Neither can the insurance industry, neither can the customer, neither can the reinsurance industry. And so, bringing in the capital markets in the form of insurance-linked securities, bringing in some form of you called it a backstop, you can call it a guarantee. I think we have to acknowledge those are not going to be growing on trees, given what's going on at the moment. So we have to design an economic system that focuses, I think, on reducing and preventing the risk so that when the loss happens, it is at least smaller. There is some element of risk financing, and then the government is, of course, the insurer of last resort as a matter of fact. But at least that way they're the insurer of last resort, not the insurer of first resort.
Would you like to make a point about that?
Just one other element is you don't build resilience from one day to the next or 1 year to the next. And I think in the rekindling the partnership with the insurance market, or all the stakeholders and the governments included in that, I think that the recognition in prevention and building resilience at a company level or at a regional level, if you're a city or a region facing climate change risk, that you need to build that partnership over 10 years. The mitigation actions that I'm going to carry out need recognition over time, and I won't be able to do that from one day to the next. So there needs to be a recognition on progress, and the solution needs to grow over time. That partnership needs to develop over time. So I can't be in a situation where if in year 1 or year 2 I get a major loss that the carrier says, well, look, sorry, we can't insure you anymore, we're not covering that risk anymore, we're changing the wording. We need to have continuity as well, stability, to be able to build that resilience.
No, I'm a bit like you. I'm kind of half and half, got one foot in different cultures. I watch British news. I live in France, and it's true that you can't count on governments anymore to, there's all the thing about governments going to back up the energy companies at the moment is making the headlines in Britain. The same questions in France. So it's far from being a foregone conclusion that national governments or multilaterals will provide the insurance industry also with financial guarantees to allow them to write these systemic risks that you've been talking about. What else do you think, I think that's quite an interesting question, that the industry can do to innovate and also to adapt to a world of interconnected and systemic risks? How do we innovate and perhaps do things a little bit out of the box, if not up in the sky?
Well, I think a lot of it comes down to really what this conference is about, which is that risk-managed approach, where the industry has to partner with its customer, and that, I mean, you talk about 1-year policies, maybe the whole issue, and the regulator has to relook at longer-term policies, so that you move out of that cycle of boom and bust and into one of actually long-term partnerships with everybody sharing an element of the risk. I mean, that's one area. I think the other thing is that incentivizing behavior is the right thing to do, but we also need to tell the customer what the right behavior is. Because if they're,
How do you do that?
Well, I think in my field, terrorism, we partner with the security services, and they tell us what they think the risk is, and they tell us what they think the best method of mitigating that is. And then we tell the insured that if they do those things, they will get a reduction in their premium. That is a partnership between academia, the private sector.
I'm just curious, are you allowed to give us kind of concrete examples of the kind of things you're talking about? What kind of things are we talking about? I mean, I don't want to kind of like...
Walk outside the hotel and you'll probably see somewhere a flower pot or something that is actually an anti-bomb device. It's basically stopping a truck bomb from driving up through to the door of the hotel. You won't notice it because it probably looks like a flower pot, but that's what it is.
I hadn't noticed it. I'll certainly have a look.
Putting plastic film on windows so that when there is a blast, the glass doesn't all shatter inside and kill the... Those are the kind of things that are done, that if you can incentivize that kind of behavior, it reduces the loss, and therefore you get the premium discount. And at the end of the day, the CFO wants to see the money. If he's going to invest, he wants to see the return somewhere else. So if he invests the money in the flower pot, he gets a reduction on the premium. That's the partnership approach.
Amelie, are you of the flower pot innovation persuasion?
Well, I'm also in favor of piloting. So the thing is, because it's about something which I said was more a matter of the planet than a local matter, that's probably more difficult. But also we could have thought that at the second lockdown, then the government would have tried something new. And I mentioned, local lockdowns as opposed to national lockdowns. So I think it's also in this test and try environment. This is where we're going to make progress. So if I think about Europe, it could be also we would choose one kind of risk, we would choose one kind of scheme, deduction from the tax as well. So I think we need to test and learn because unfortunately here we had opportunities, unfortunately, to test it for real, and it was too late. So I think that could be an option to move ahead and then look at what's really working.
Oliver, what kind of innovative approaches would you see?
We talked about data this morning, and I think we're sitting on a gold mine of information, and my understanding is that we're struggling on how we actually use that data and what it actually means. I think innovation will come from mining that data a lot more and then getting better understanding. And I suppose as a corporate, we've got limited amounts of data because we've got our own data. And we're probably not using that well, but we're
Why not?
improving.
Is it a problem of processes or a problem of profiles of people who you employ to do that?
No, I think we built systems not around data, but around what we wanted to report. And so if your critical point is data, then you can actually use it in any slice and dice it in any different manner. So I think the way we built some of the IT systems is probably not that adapted. But when you look at the insurance market, the brokers, the amount of data that's actually available there and probably not used to its full extent. I think there's probably a lot of innovation to come from just analysing that data, and then we'll probably find different solutions. We'll be able to test it through models without, and then obviously develop pilots as well where we need to co-construct new solutions.
Yeah, maybe just on this, and as EIOPA was mentioning earlier, the issue of silent cyber, for example, we believe at Lloyds that the way forward is affirmative cover, so where you would start, but you can start small, and that's maybe another way to explain what I meant by testing, so that then companies, SMEs, can start to have a small coverage, and there's a cap, waiting for more data to come. And because then they would start something small, and I've been in Asia, and you think about emerging customers, and you would think about, a policy on the health side with just a few rupees. I mean, similarly, you could think about SME coverages, and you would start small, and then it gives, the time for companies to think about it, experience what it feels to have this kind of small coverage, and then you can grow bigger.
Okay, I'll come to the floor because I think we have a few questions here first. I wanted to reassure you I haven't been censuring Alfred Sant. We've actually lost his connection, unfortunately, but I'm actually going to, in a way, take advantage of that because I'd like, perhaps you can speak a little bit more freely now, about what you think about what you heard him say about the EU level. How is it possible to move things forward so that the EU can actually play a role? I don't know if you want to put your hat on as in Italiano to talk about the EU, but what would you say?
Well, I think what he said, I think, is probably very accurate for governments around the world, in that I think all of them have been caught by this. Let's face it, it's a once in a generation, more than once in a generation issue, and so none of the politicians have got any experience of dealing with this. The issue about spending money on resilience, of course, as a politician, and I think that's what he was alluding to, is that if you spend the money today and nothing happens on your watch, nobody's going to thank you for it, or somebody in the future will get the thanks for it, but that doesn't help you get re-elected, and that's a big part of the political issue. And somebody else said this morning, we're still in the middle of this pandemic, and so politicians have not turned their thoughts to how do we better prepare for the next time this happens, because a catastrophic cyber outage would make the pandemic look cheap. So they know they've got to do something. They know the insurance industry just simply doesn't have enough capital. What are you talking? $4.5 trillion worth of loss. The global insurance industry has $1.8 trillion worth of capital. So the insurance industry can't solve this issue. It has to be a partnership, public-private. It has to involve the customer. It has to involve academia. In terms of a pan-European solution, I don't think he's wrong, but I do not think he will be successful in getting a backstop from the EU or from any national government, precisely because you've now just seen the size of the loss, and no government can afford to do that again. But the design of the economic structure has to start to think about, and this is where the difference between systemic and catastrophic comes in, because if you're talking about a systemic loss, well, it hits the whole world at the same time. But there are going to be multiple catastrophes that will be national in nature, and the financial markets have got to figure out how they package up risk and sell that internationally so that countries start to share risk between each other, because otherwise I don't think you'll ever get out of this hiatus.
Emily, if I can bring you down from the galaxy onto the small EU level, how can we make the EU work together, at least a little bit?
Well, I think that, as I said, mutualization only works if it's the law of large numbers. So, the bigger, the better. So definitely, I think...
We're always being told we're the biggest single market in the world. I mean, if we can't do it, who can?
But I would be with Julian as well on it. It can't be even just European, because this is what we've seen, and hence my analogy to somehow the galaxy, because again, for it to work, I mean, that's this geographical diversification, which is absolutely key. So that's because things don't happen always at the same time. And even the pandemic, if you think about, Australia or New Zealand, it didn't happen at the same time. That's absolutely crucial to look at it globally. And hence, if I think about EU, for us at Lloyd's, it's really this cross-border regulation which needs to be improved, because otherwise then you can't provide to all the customers on the planet the right coverage, because you need to have capital which is planet-wise covering risks which are planet-wise. And this is why I think the EU should allow for more access and vice versa, so that they would have more coverage, but also probably provide more coverage outside of the EU.
Oliver, for the EU?
Well, I agree on the fact that I think it goes beyond the EU, in the sense that the interconnection between risks, and when major risks happen in a given country, it will probably impact many more countries outside of the EU around the globe, and you see that from supply chain impacts and so on. I think it's a real opportunity for the EU. I don't think the EU has been that capable of demonstrating a multinational approach on many aspects, and why not use the COVID-19 crisis to say, okay, well, maybe we didn't do so well in the management of the crisis itself. They did try with how they purchase vaccines and things like that, but I think there's a point where you can actually use this as a key opportunity to work on building a model together, and then selling it to the other countries, selling it in the sense, that everyone buys into that sharing of the risks. Whether they can do it or not, I'm an optimist, so, you have to be when you're a risk manager. But I think it's a great opportunity for Europe. So I think that's today is their challenge, definitely.
I totally agree with that, and I think the point I think that you have to then make is that even if the government isn't going to give you a backstop, they do have to provide policy decisions that help what Oliver's just described, because if nobody buys the product, that's not a pooling of risk. In Italy, you alluded to my Italian heritage, 2% of the population buy earthquake risk, which is an extraordinary fact in itself, right? There is no pooling mechanism in Italy, so it's an anathema to that culture. So for it to work internationally, you've got to get buy-in, and as we all know, getting buy-in in 26 now, isn't it? Member states is not an easy thing to do. So it has to be, in some ways, driven by an insurance market, which is international by its very nature. But policymakers have got to help.
I'm just going to ask you a question, because it's quite interesting. It's not every day you have three British European people. Has Brexit made this more complicated or not? Do you want to be drawn on that? But I'm asking the question because I have in front of me two, obviously, British and European people.
I don't think it's made life easier for Britain, to be honest. But but I wasn't for Brexit. So. No, I think whether England's whether UK's in Europe or not, it doesn't mean that you've got to stop the dialogue. They're close enough neighbours that I hope they still work together. That's for sure. It's certainly put a bit of a mess in where you seek insurance and the paperwork that you have to fill out to go from one country to the other. But
yeah, which is precisely why Emily's sitting here, because Lloyd's, in order to continue to operate in Europe, had to create, given that the whole point of Lloyd's is it sits in London as a marketplace, all of a sudden it now has to have an operation in Europe in order to continue to do business with its closest partners. I'm not sure. I think what you get here which I've been very impressed with, is just you get European parliamentarians talking about this issue, former prime ministers talking about this issue, EIOPA, the state regulator, talking about this issue. The bandwidth to do that in the UK simply isn't there. And so I think there's a huge advantage, strength in numbers.
Okay, we're still live in the audience, so I'm going to take some questions live from our Brussels audience. There we are. If each time you could introduce yourself so that our panel knows who you are.
Adriana Cavaliere, board member of Belrim and a corporate risk manager of the Belgian air traffic controller Skies. So this morning, the concern has been shared with regard to SMEs, so that they can not longer buy insurances, or that they do not longer, simply because they can not longer pay the price, or also, as Oliver also has said now, that they do not have the proper resources to do the real risk investigation. On the other hand, it has been underlined that there are also upsides in this current situation, being that risk management is more exciting. However, when connecting these two views, I strongly believe that the term exciting is getting really a different connotation. And therefore, my question, where are the SMEs in this whole picture, especially seeing the fact that a lot of European organizations are SMEs, and how can they be helped, and on what support can they count? And it would be nice to have your views on this topic. Thank you.
I think there's also a slightly more exciting is a little bit of a different word in French. It's like exciting, excitant in French means it's kind of like can be a challenging situation, whereas exciting is a much more positive word in English. So that perhaps there was a slight kind of like thing of that when our colleague said that this morning. Would you like to take on that point?
You go for it.
Well, I'll start. I mean, at Amare, we've always focused on all companies, whatever the size, and obviously there's a bit of a bias for large corporates because they're obviously massive and they're the ones that you see in the press, and that they have the investment risk management teams, a director of insurance as well, and so on, and then so you obviously see the biggest ones. When you get a crisis like COVID, you see that effectively those companies can probably survive quite well. But the SMEs constitute a significant portion of your economic tissue. So if you haven't protected that, so that's why we work and have been working for a number of years, trying to provide free access to tools such as risk mapping and so on, things that are quite easy to be done at a small, very, very small scale company. And then on the insurance aspect, the work that we've been doing over the last few years on captive, so the self-insurance vehicles that you have for large corporates, is also explaining to the government that there needs to be a solution for the smaller companies as well. So captives, would only be used for a certain size company. And it's a vehicle that can be quite complex, and you need a certain level of maturity on how you actually use that. But the fact that you're actually able to do a simple accounting provision for a rainy day, if I call it like that, is something that's not planned for in the accounting system, and that's one of the elements of the law that's being discussed at the moment, is that ability to actually set aside a portion of your results to better prepare for a stress or a shock and be less reliant on taxpayers' money. And that flexibility exists through a number of other provision mechanisms for large corporates, environmental provisions and so on. So why can't we do it without affecting it to a pandemic risk, but to a systemic risk or catastrophic risk anyway? So those are the sort of mechanisms that I think should be open to companies, and that's what's being discussed at the French government at the moment.
Amélie?
Yeah, I'll come back to the idea of innovation on simpler products, as mentioned before. But I will add to that so those simple products providing a minimum coverage, that's probably what SMEs should think about, and insurers. And I think it's also about trying to have a bit of a bundle. So it shouldn't be just about pandemic or cyber. What's difficult, of course, in the insurance world is to provide a cover for something that we don't know. So it needs some definition. But I think it's this idea of a bit of a bundle for something which is not there yet. But this is where the mechanism of payment shouldn't be based on a list of, exhaustive list and limited list of things happening. And this is where we would need also some creative thinking about the wording.
Okay, and Julian, would you like to react?
Sure, yeah. I think I'm trying to think how to react without getting myself in trouble. But I think part of the problem with the SME is that the classic buyer, and I can only talk for the UK, but the classic buyer of the SME is probably in financial difficulties, and therefore insurance is a discretionary spend. Only where insurance is a mandatory spend will they actually buy the product, motor insurance for the white van, whatever it happens to be. They want to buy the product in a way that's easy for them, so that tends to be at 3 o'clock in the morning when they're worrying about it, and they want to be able to do it on the internet. If you now try and buy a complex product like cyber or terrorism or pandemic, the chances are you will not be able to do that at 3 o'clock in the morning because you'll be referred to an underwriter, if you can find it anywhere on the website anyway. And if you then ring the underwriter in the morning, if you're that prescient and you think to do it, the chances are they will say, if I was you, I really wouldn't bother because the government will bail you out anyway. And that's why you have such low penetration in SME when it comes to this kind of thing. So it has to be what Amelie says. You have to have a product that covers you for the effect that is most damaging to small businesses, which is NDBI, non-damage business interruption, not trying to sell them 10 policies for cyber, D&O, pandemic, terrorism, etc., etc. And you need the government to cooperate by saying, look, we want you to be able to sell an affordable product. There's no point in charging them thousands of pounds. You're going to have to charge them a risk-reflective premium. And if you're in, I don't know, the Outer Hebrides, that price is going to be very low. If you are in central Paris, that price is going to be higher. But that's the pooling of risk. That is risk mutualization.
Okay, we have time here in the studio for one final question, maybe. If anybody would like to make a comment or ask a question. Yes, we have from our friend who I think has asked a question in every round table. But please reintroduce yourselves for our panelists here.
Carl Riemann, board member of Belrim. I fully agree that the solution, and I've been working in a working group on non-damage BI, because that's the big elephant in the room, and certainly the big companies are looking at without an enumeration of the type of risk, just non-damage BI. But it could also exist for small company if, for example, you make it mandatory. The only thing, and that you should be careful, is that you put a number of levels on mandatory prevention, because what we've seen, for example, with the ELD, environmental liability, where at a certain point a number of countries were lobbying for a mandatory insurance, and you saw that the countries who were lobbying for this didn't have a lot of prevention and were the worst in the statistics of environmental disasters. So you should avoid that you get into a situation where they say, well, I don't need to take any preventive measures because I have a coverage for it. And then you will have the situation that people say, why should I pay premium if the others want? And certainly the big companies will make a number of preventive measures and take steps, but the smaller may not. And you should certainly build in something to have a level of prevention that is mandatory in order to get the mandatory coverage. Otherwise, it will never work. And so the trust needs to be not only between the insured and the insurer, but also between the different insured, that they have trust in each other, that somebody else will do a good job in order to avoid the same type of damage.
A final comment from all of you, maybe about the elephant in the room. Then let's start with Oliver.
So I'll come back to the basics, which is risk management. I don't think you can create any insurance solution unless there's a good understanding on what risk exposure is. for the company, for the insured. But you need to have that risk management, to have the dialogue with the market, see what it is that we're actually covering, what is the solution that we're trying to find, and that we provide that flexibility in terms of how I actually spend the cash that was given to me, and what I invest in terms of prevention, protection, how much I actually practice against that crisis as well, which is a critical point, that I get, my reflexes in order to actually be able to manage the crisis appropriately. And then I can actually talk about insurance and have the adaptation of the product that's needed. But simpler wording would be great, definitely. But I think without that fundamental, I don't think we have a resilient economic tissue or resilient companies, to be honest.
Amélie, are you going to take us back to fundamentals too?
Yeah, I mean, I'm building back on what Carl just said. It's about partnerships and skin in the game. So I think the good partnership work well if both sides have skin in the game. So it's true for the customer as well, and building prevention, and it's true as well for private and public, and that's the way forward, partnerships.
Okay, Julian, what would be your conclusion?
Well, I think I'd probably, again, build on what Carl said. He designed a pretty decent system there in terms of, on the one hand, the mandating of the offer, which sort of builds the premium in the pool, but it also builds resilience by, educating those small businesses as to what preventative measures that they have to have. You're never going to get enough premium in the pool to pay for the kind of losses we've just seen, but you can reduce the size of those losses. And I would certainly go for a commercial solution where that is a premium paid for risk transfer and risk mitigation and risk management than I would for a socialization of the risk where you just pay a percentage on top of your policy and you get the cover automatically, because that doesn't actually build resilience.
Okay, thank you very much indeed. I think we can give a round of applause to our members of the panel. I'm sure you're doing the same if you're watching us wherever you're watching us from. Thank you very much indeed, and thank you for having explained the 4 layers of FERMA's shared resilience framework. So that's the end of our final round table. Also, thank you very much to Alfred Sand, who was with us at least at the beginning. Then he unfortunately got cut off, but it was much appreciated that he joined us live. So I'm going to ask you to leave your places. We're going to play a little bit of musical chairs. And to wrap up for the conclusion, I'm going to ask Dirk to come and join us on the central table. Dirk. So we swapped places now. Dirk, we're coming to the end of, we are at the end of these 2 days. Can I ask you how you feel about them?
Actually quite happy, thank you. On a more serious comment, I think we are all, of course, disappointed that we had to make the decision to postpone the forum of Copenhagen to next year, so that we cannot have this huge market gathering and get together with the European risk management family as we thought we would have in autumn of 2021. So I think we had to be, as an association, work on our resilience pattern as well, and we came up with this quite innovative solution, and I think it went relatively well. So we had 1,000 registrations coming from 47 countries. 18 of them were non-European, so I think from in terms of attendees, already quite a success, and I think that's already pretty good, and we can be happy with that. We will, of course, seek for a more detailed feedback from the audience, what they have thought, how meaningful, how important the debates and the roundtables and everything have been to them. But just from a pure attendees perspective, we are already quite happy. Okay, well, this event marks the start of your second 2-year mandate as president of FERMA. Perhaps it's an appropriate moment to know about your plans. Yeah, I mean, first of all, I'm of course pleased that I still have the confidence and trust of our members to prolong my mandate, because before I could become re-elected, so to speak, as a president, I firstly had to prolong the mandate of my board membership. In terms of course, the agenda and the topics, I mean, what we started was we wanted to align our work a little bit with the agenda of the European Commission, which took over also to 2019. So digitalization in the European Green Deal is, of course, still in the focus. Of course, the pandemic has also shaken up our agenda a little bit. So this entire idea of the resilience framework you just spoke about with the last panel is something which was also came to us, and we had to react and to adapt. But I mean, in the ultimately the topics will remain the same. We still think that neither the European Green Deal nor digitalization will go away. So we picked the theme from risk to resilience, learning to deal with disruption, for this event for the last 2 days. So everything what we have discussed within these 2 days will remain on the agenda: climate change, cyber exposures, and so on and so forth. So that's the program for the forum next year will pretty much group on the same topics, we believe. Of course, unless we don't have to adapt because some other development might happen in between.
Now, I've been lucky enough to host quite a few FERMA events in Monte Carlo, also in Berlin, and also a few online. And this is the first one which has been kind of between the two. And we've actually made a video of the atmosphere of these last 2 days, especially for you if you've been watching us online. You haven't been behind the scenes, so we thought it'd be quite interesting for you to know exactly what went on here in Brussels. So here is a video of the atmosphere behind what you've been watching, the FERMA Talks. Welcome back, everybody. It's nice to see you again.
Titanic sunk because it was thought to be unsinkable. Let's think about the unthinkable and assume that it goes sinking. What does happen? That's the kind of thinking that we do with the risk managers in the company.
We're going to be talking about green issues.
Foresight is something between the art and science.
As a risk manager, we are taking a lead on that initiative.
And really joining forces to create something meaningful from Europe.
What is now for you the value of a partnership?
Thank you so much to all of you. Gratias, grazie. There we are. That was a little taste of the debates over the last 2 days. Dirk, would you like to say just some closing words? And I suggest you say them to the people who are watching us. That's your camera over there.
Thank you. Yeah, of course. I would like to acknowledge the work, what have been done by so many people to make this all happen. First of all, to Vice President of FERMA, Charlotte Hedemark-Hanke, for putting this program together as the chairperson of the program committee. As always, after the event is before the next president, and I'm very happy to know that she will carry on with her team to also put together the program for the Forum 2022, I have to say, in Copenhagen. My fellow board members, FERMA board members, who were so kind to join us here and to support what we have done here live and ask questions and supported the discussion. So thanks very much to this. Of course, the representatives of our member associations, we had presidents being with us, supported the panel discussions, so thank you for those as well. The representatives of the European institutions who attended the panels and the discussions and shared their views and insights, which was very encouraging to us, and we look very much forward to working with them together for the next 2 years. strategic partners who made this possible, this event, but also were so kind to have their CEOs spend their time with us and presented their views on the status of the market, so which was also very, I think, a valuable insight for all attendees. The audiovisual team, of course, who made this all possible. We don't had any major technical interruptions, so that's of course something where we came off very happy. It was of course important, and I very much hope that you online had the very same experience as we did have here live in the studio. Our biggest thanks, of course, goes to the entire wonderful FERMA team who supported us, who organized everything. So this is, of course, one of the major contributors to the success of this event. And last but not least, I thank you all for taking part in our FERMA Talks this year online. And I do very much hope that we can all get together next year in Copenhagen to have a forum as a full live event, as we had so many in the past. Thank you all. Goodbye.
Thank you. I think we can give you a big round of applause here. You can hear us from Brussels. Thank you so much to everybody here in the team. You have a fantastic team. It's always a pleasure to work with FERMA. And thank you very much also for watching us wherever you are. And see you very soon. Bye-bye.